And I am very happy to welcome our guest today on our cannabis discussion, Dr. Raymie Trith, Jordan Trith, who's his son, and Scott Berman. And just a couple of words about Panther Group. A strategic advisory firm founded in 2020, offering capital strategic advisory, B2B lead generation, and data-driven digital advertising. The co-founders, along with their fund principals, manage 3 cannabis venture funds, totaling 40 investments across 20 plus subsectors since 2014. Panther Group plays an active role with the majority of the fund portfolio companies, providing platform services and serving on their boards. I will perhaps start with Jordan, CEO and co-founder. Previously served as principal and day-to-day manager of the Panther Opportunity Fund. Also worked as the CFO, VP of Finance, and controller for high growth private companies and venture funds, raising over $30 million. Scott Berman, president and co-founder, co-founded and exited multiple companies in the ed tech and cannabis distribution sectors, with 20 plus years of experience working in politics, cannabis, world healthcare, and digital advertising. And last but not least, our special guest, Dr. Trith, a strategic advisor for the Panther Group, previously founded his own healthcare company, taking it public on the NASDAQ, raising $40 million as chairman and CEO. Dr. Trith has also established 2 cannabis-focused venture funds and sits on multiple cannabis company boards. So, good afternoon, and I have to say that we've been interviewing probably hundreds of people along the past several years, and what's special about the group is the fact that its partners and advisors have come from the sector and other sectors with exits behind them, and I meet a lot of funds, and some of them are great, some of them are not so great, but very few have that kind of experience. And throughout the years in many other sectors, I've seen VCs that were founded by folks who actually done it before, saw all the different stages of building a company, all the different hassles, lived it from the ground up. And I think that is a very, very special, unique edge that you guys have. So I'm very happy to have you here with us. And yeah, so I guess, first of all, is there anything else that you would like to add about yourselves? If so, this is the time. And I guess the opening question would be cannabis, what's going on there? It is a sector that obviously is growing tremendously, had its days several years ago and exploded as well. I would assume, I'm not the expert, that in a way that bubble, kind of cleaned, if you will, the space, in the sense that those who survived are the more mature, serious players. And that would lead me to ask you not just what's going on in the cannabis space, but how did COVID affected it, which I assume positively for obvious reasons. So that's my first question. And again, if there's anything I didn't mention, I read a very short bio of you guys. So if you'd like to add anything, please.
Yeah, I'll go ahead and get started. Thanks, Denny, for having us on here. We're excited. We know that we to speak about the family offices. So we've been involved in the family office world for several years. We have a number of investors in our earlier funds, current funds that are family offices. I always like to say, if you met one family office, you met one family office. So we understand that every group is unique, and that's part of our approach, is to understand each and every investor and know what makes them tick, what gets them excited, and how they want to get engaged and present opportunities to them. So we're excited to be here and to start building a relationship with a lot of your audience. In terms of COVID, as you pointed out, yeah, COVID was for obviously a lot of businesses, it was very scary and unclear at the beginning. We were fortunate to have a situation where pretty much all states declared cannabis businesses as essential. And so similar to healthcare and retail, significant retail, we really didn't see a disruption in terms of being open. One of the things that did happen was a very swift acceleration to moving things from more of a brick and mortar to more acceptance from a digital standpoint. So whether that was e-commerce, allowing people to buy product online and pick up curbside, or whether it was telemedicine, and on the medicinal side, people being able to get medical cards and see physicians through telemedicine. That's another thing that's happened. So pretty much it was all positive. We've seen now through this that you could put cannabis in that kind of recession-proof type category. So it's been helpful in that sense. In terms of what's going on in cannabis, as you pointed out, as many people are aware, things are moving very quickly. We say that 6 months in cannabis is like 2 years in the real world. So we have, as you pointed out as well, gone through a little bit of a correction, certainly on the public side, where many of the stocks have retracted and are still at probably pretty low levels relative to kind of historic PE ratios and different metrics like that. So from a public side, there's definitely a lot of upside that we expect to happen over the years. And I'm sure we'll be talking more about that as time goes on, about what can help move this industry from a valuation side and et cetera. So those are my opening comments. Again, thank you for having us. And maybe I'll just lead into something for the other guys, both my father and Scott, which is how they got into the space, what made them get into the space, because both of them have been in it for about 8 years, which is a long time given the relative nascency of it.
And both, by the way, come from other sectors. I mean, ed tech has nothing to do with cannabis, and so both came from different worlds into this one.
Right. Well said. So thank you for having us, Denny. Appreciate it. This is Raymie Trith. And actually, my history in cannabis really starts back from my desire to be involved in early stage companies, building companies from my own experience of building a company, taking it public, and eventually getting into the capital markets, which I've been involved with for the last 20 years, involved in multiple funds, some international, some national, and some local. So I've always looked for new things, new trends. And I felt in 2013 is when I felt that cannabis was going to be a trend that's going to go from the West Coast to the East Coast. As we know, most things start in the West Coast from a revolutionary standpoint and end up in the East Coast. So I made connections with people who were early on in the industry in the ArcView network. And by 2015, I was starting to invest my dollars in the space, and then quickly raised family, friends around. And as they say, rest is history. But it certainly, I felt the trend was going to be there, and it's certainly proven that cannabis is going to be and continues to be an unbelievable growth sector in the industry. It's growing about 35% annually, which is remarkable over the last many years, and will continue to do that over the next foreseeable future. So I even heard a report where it's going to be about $200 billion industry in about 5 to 7 years. So that's what I saw. And as we all know, a lot of people have experienced the plant, and it's going from a black market to a white market situation where the real growth is. So that was the other stimulus, that there was a built-in market for the product.
So you basically brought your son, excited him about this business, not the other way around, it seems.
Right, right. I brought him into it. Exactly right.
Most parents tell the kids to stay away from cannabis, but you said, you know what, you should check it out. And what do you do for a living today?
I'm an ear, nose, and throat specialist. And even though I've been in the world of business, which I am, I do about 50% of the world of business, finance, secure debt, all kinds of stuff, really. I diverse investment experience, believe me that. But anyways, I'm a half-time physician, ear, nose, throat specialist, the other time doing this. And what you see now, I'm glad that Jordan has taken over and taken the reins and taken it to the next level.
Wow. And Scott, you come from a completely different world. Why didn't you just
Yes.
keep on going with another company in
Well,
that space, in ed tech?
ad tech, yeah. Well, thanks again, Denny, for having us on. Appreciate everybody tuning in. So my ad tech business was focused on politics and healthcare. And in 2014, we had a lot of political issues that we worked on. I had a cannabis client called the Marijuana Policy Project. They were running ballot initiative ads in Alaska. And we got involved trying to get yes votes, and it worked. And so I looked ahead at 2016 and 2018, every 2 years, there was a whole bunch of new states that really flipped it on. And so I would travel to those states and really see what was happening on the ground. And just trying to sell advertising in the early days, cannabis brands were coming up from nowhere. A lot of people were making weed and selling it in retail, but there wasn't a lot of advertising in between. And so we saw that there were a lot of gaps and we saw a lot of opportunity. And so we just came in and started poking around. The first business that we launched was a distribution business in California in 2015. And we understood that the market, as it developed from medical to adult use, would undergo a lot of changes. And so we started focusing on what each market would need and when they would need it. And then 2016 and 18 had a whole bunch of other states that really flipped it on. So we could see the total addressable market size grow rapidly. The other part of my business was healthcare. And we worked on patients with prescriptions and ailments that people had, and we were running advertising on that side. So I was looking at the medical marijuana field, and there was a certain list of conditions that every person would get in each state to get a card. And so I thought, well, now we have a political and a healthcare issue in cannabis, and it's going to evolve in that direction. So the more I looked at the space, the more opportunity that I saw. And I was super fortunate to have that exit, and it was time for me to invest. First person I called was Dr. Trith here, and then he introduced me to his son, Jordan.
And Jordan, how did you, well, we know how you ended up here, but what's your story really?
Yeah, sure. So I went to University of Michigan, so I had a traditional business background, accounting and finance. From my father, as you can tell, is very entrepreneurial. I always worked in kind of early stage companies, so built up a lot of experience working with startups, helping them raise capital, go through those challenges of growing their business. And so in 2016, I was finishing up a stint as a co-founder of a ERP software business. And my dad encouraged me to go out to Las Vegas to join the big annual conference. And I went out there and I fell in love with the industry. Everyone was, as we say, an immigrant, had mostly, past lives. Very few people grew up in the cannabis industry, but instead, have a passion for some aspect of it and have come and decided to make a second career within cannabis. So I really enjoyed meeting the people. I felt like my background with accounting and finance and early stage businesses was a really nice fit for the stage that the industry was in. And frankly, I wanted to get on the other side of it in terms of deploying capital instead of always raising capital. So, being in the seat of a fund principal and choosing which businesses to invest in, I really like that role. So that's how I started, and it's evolved, as we'll hear later in terms of what we've seen as needs in the space and how we've adapted our business plan.
Great. And so you guys opened a fund. I'm not sure if this is the first or the second. If you can tell us a little bit about really Panther Group, and my first question there would be, what's the criteria you guys look at for making investments?
Yeah, so this is our third fund. As my father said, he had a fund in 2015, which at the time was investing mostly, first of all, the industry breaks up, for those who don't know, it breaks up really into two buckets. You have the ancillary businesses, which are the ones like software, technology, real estate, banking and compliance, packaging. It's what we call the picks and shovels, of the gold rush, right? So this is of the green rush. The ancillary businesses are the picks and shovels. And then you have the plant touching businesses, which need a state license. Obviously, it's not any federal licenses at this point. So those are retail dispensaries, cultivation facilities, distribution companies, lab testing, et cetera. So at this point, across 3 funds, we've invested in 40 companies. And as you mentioned, 25 plus subsectors. So really a diverse group of companies. We've created an ecosystem of investments. In terms of what we look for, so we started out, the first fund was all ancillary businesses. And at the time, 2015, many of them were pre-revenue. In 2017, we moved upstream. So we started making investments in the Series C, Series A rounds. And now in our third fund, we're focused on Series A and Series B rounds. In terms of what we're looking for in companies, we're looking for companies that have some sort of special sauce, whether it's intellectual property, whether it's a competitive moat, whether they're a market leader. So we're looking for companies that stand out. Well, we're looking for companies that have clear traction. So Series A, Series B rounds, revenues usually are anywhere from 1 to 2 million on the low end, as high as 50 to 100 million on the higher end. We are looking for very experienced and coachable management teams. Because we're investing in 40 companies, we can't be there every single day running these businesses. So we've got to rely on the trust of the companies that we invest in. A big focus based on Scott's background is on data, monetization, and advertising. So we're looking for companies that we can leverage some sort of data strategy to bring more value. And we're looking for companies that can exit in 4 to 8 years at a 5 to 10 times multiple. So we're looking for significant growth within those underlying businesses.
Got it. I see some questions from folks. We'll get to that in a second. And I see Patrick here. Patrick, if you have any specific question, just go ahead and ask. So what are some of your most successful investments so far? And why do you think they were so successful?
That's a good one for me, since I've been in the longest. Let me talk about that. This is an interesting company. It's actually one what Jordan was alluding to, looking for something special in a group. And this is a company called Pathogen DX. And what's special about this is a science-based business. Specifically, PhD scientist out of Arizona developed a way of fast testing pathogens. So in other words, taking whether it's E. coli or mold or anything, and then being able to take a test within 6 hours. Normally it takes 5 days to get results. So this is a team that we followed early on, that was a young CEO, relatively young, had some experience, and certainly the scientists. We followed them for a couple of years, actually, before we invested, till they got their act together in terms of corporate structure. And then we invested when they were under $1 million in revenue, but having certain patents already in place. And now today, this company, and the idea was to get into cannabis space, mainly it's a high crop product. So that means people were willing to pay for a new testing technique in the space. Anyways, the whole idea was eventually to take it outside of cannabis and go into food and go into even medical. And that's what's happened. So today, this company's about $1 million a month in revenue, has patents that are unique in the space, that is morphed into the medical space, as a matter of fact, with diagnostic testing for COVID variants, and now is selling its product in Europe and nationwide. So that's a unique thing where we're looking for science, we're looking for a strong base and innovation. So that's a very good example.
And what kind of involvement do you have with the companies?
Well, that one particular, I'm on the board. I have a board observer seat. We actually helped raise that company. We actually led the round, even though we didn't put in the most amount of money, but through our relationships that we have with other VCs and other high net worth individuals, we were able to raise a 2.5 million raise for the first, went back when it was valued at 8 million. So
Got it. And by the way, how do you see the Canadian cannabis space versus the US? I mean, I think the Canadians were more open about it. US is getting there. Israel, where we come from originally, has also a major part in this world, I would
Good.
say. How do you see that?
well, as far as Canadian, Canada was the first country to legalize it in the Western Hemisphere. So for sure, it was a big thing. It's now the big thing about Canada is that they have institutional capital investing in their companies. So their valuations on their public companies is higher than on the American side because we don't have institutional capital. And of course, you know the story here, we're state by state driven. So until it gets fully legalized in this country, there'll be a difference between the Canadians and us for sure.
So basically, there's a bigger opportunity here because valuations are lower.
Correct.
And so no institutional wealth is going at all to the cannabis industry at all? Nobody, no state, nobody's touching it yet?
No,
Very, very
States-
minimal, yeah. So that's actually, that's why we've made a conscious decision to really spend a lot of time with family offices. Because institutions, whether it's their banking relationships that, inhibit them to invest, or whether it's just from a size standpoint and a reputational risk, they don't want to be associated with cannabis, which still today has a stigma with it. So family offices, are the best position from a wealth, from a flexibility standpoint to make a significant, play in cannabis and build, even more generational wealth by, as we talked about, participating in this space that's growing at 30% a year still, and that doesn't include states like New York, New Jersey, Florida. I mean, they have medical markets, but nothing on the adult use side. The biggest markets in the country, aside from California, are Colorado, Illinois, Nevada. So there's a lot of growth to be had, but there are some things that ultimately will usher in institutional capital, but it's a fraction of what it could be.
And other sectors you wouldn't touch?
Within cannabis? Yeah, you want to answer that, Deb?
Yeah, I mean, there's certainly one thing that I say nowadays, it's a little different, the industry is maturing, it's getting, it's evolving. I would say it's evolving. It's got a long way before it's matured, that's for sure. But I wouldn't invest in single entities like a single dispensary, a single manufacturing facility. You're looking for those, you want to have multi-location. Then the other one is really actually the flower itself, the plant, cannabis itself, what people call the plant or the flower, because that's cultivation, and cultivation is now driven. It's really almost a commodity industry, just because it's hard to really get brands, flower brands. There are a few people trying it, obviously the big names, like Snoop Dogg and Willie Nelson, those type of names. But other than that, it's really hard to get a specific say, hey, I want to have this brand of flower. So that's, we stay away from that.
And what resources do you think investors can use to expand their knowledge about what's happening in the cannabis world?
Yeah, so we play a big role in this. This is, we realize that education is really important. We've been in the space for 8 years. We've got a lot of knowledge that we want to share with investors. So whether it's webinars that we put on, we actually put together with another family office group, what's called a council, where we bring in family offices that are active in the space, and we share due diligence. We share, market feedback. We co-invest in deals. So there's a lot of collaboration that happens in this space. I use the adage, rising tide raises all ships. So we very much, are looking to collaborate and, and usher in more, capital by educating. We have a newsletter that we put out on a regular basis. We attend family office events in person. So, going to those and being in person is great. And then lastly, visiting businesses, entities like I was in North Carolina last week visiting a facility with one of our family offices. There's no replacement for being on the ground, spending a few hours in a business, really hearing and understanding where businesses are differentiating themselves, what challenges they have. And you can't get that on a 30-minute Zoom. So being there in person is really critical for building out the space. Yes, we will. Yeah, thank you for that question. Anyone who's attending, I think Denny told me we get the ability to reach out to you. So we'll share a link to the newsletter. We'd be happy to have you join our newsletter and learn more about it. Absolutely.
And hopefully we'll meet you in New York. We have a conference coming late April. And
Yes.
3 events in Canada before that. But somebody's asking, what's your typical investment range?
Investment size?
Investment size of companies and investment range, I guess, how much money you would be putting in each company.
Yeah, sure. So our average check size up until now has been about $500,000 is kind of our sweet spot. What's different and unique about us is in addition to the money we put in directly, we oftentimes set up SPVs, single purpose vehicles or special purpose vehicles. So we'll go and raise, right now, actually, we're investing in a deal where we're bringing about $2.5 million between our $500,000 and then individual investments from our limited partners. Along with that, we occasionally bring in family offices direct into deals. So usually we're involved in raises that are, I'd say about 5 to 20 million in total raises, of which we're usually putting in $500,000 to $2.5 million with ourselves and the SPVs, and then working closely with other VCs or family offices to help round out the rest of the round.
Yeah, so for your newsletter, somebody's asking if you can provide a link. We'll send it to everybody, but if anybody wants to type it here, you can type the link to the newsletter. What is the landscape for allocating capital to deals? Competitive versus collaborations? Yeah,
so as I kind of talked about, I think there's a lot of collaboration that happens in this space. Again, that rising tide raises all ships. There's actually a WhatsApp group that we have amongst about 70 active investors. So there's a lot of knowledge share that happens there. Oftentimes, we'll go in and piggyback off of another fund's due diligence, and so just to save ourselves time and stuff, we'll benefit from working with another group. Particularly in our case, because we're pretty diverse in what we can bring besides capital with our advertising. We have lead gen services, M&A. So it's pretty common for us to come in as a strategic investor alongside some bigger investors. So we work closely with a lot of other groups. I'd consider it pretty collaborative.
And okay, so a very important question is regulation. Obviously, that's what's stopping a lot of the growth all around the world. I don't know, by the way, how US is versus Europe. I mean, obviously Canada was better. I think Europe is lagging behind US, but I'm not sure. So what are the next political and regulation changes that will impact cannabis, and when do you see it coming? I know we did sessions about psychedelics, which is several steps higher towards a different direction. And I heard that, many are in the Senate are way more open to it than they were before. Definitely during COVID, that brought, they just decided they need that. So I guess for cannabis, it would be easier. So again, when do you see a regulation and political changes, and how would they impact the industry?
So it's a great question. A lot of things are happening behind the scenes. There's a few different bills that have been put forward lately. One was by a Republican from South Carolina, a States Reform Act. There was another bill put together by Chuck Schumer that he's trying to revive right now. So while he's in control of the Senate, he would like to bring it up. There's the safe banking bill. That's actually one of the most important things that's on right now, and that would regulate banking in the industry, which is a major problem. It would also open up, you mentioned earlier about institutional funds coming into the space and traditional banks. Right now, they're afraid of it because the banking laws are archaic, to be honest. And so we're looking for that to be changed. A lot of things happen in an election year, not just on the federal level, but also state by state. So there's a lot of smaller regulations within each state that could really propel the industry forward. So we do see this year as being a catalyst. As Jordan mentioned, COVID moved things along faster, and the political winds are really in our favor right now.
God, also maybe just talk about this. This is one of the few issues that's really not a part. It's not a partisan issue.
Yeah, it's really interesting how it's shaped up over the last, say 8 years or so. It's really more an old versus a young than Republican versus Democrat. So cannabis has bipartisan support. It always has, and it probably will. A lot of Republicans think states should make their own decisions. A lot of Democrats think it's about liberty and justice and freedom. And we're all in favor of the cannabis plant. And so it's really there's a small percentage of older politicians in a few key spots that are holding things up. And that happens on the state level, but also on the federal level. So each 2 years, when you have a turnover of Congress and you have a new or younger electorate, you find that support for cannabis ticks up. And we will continue to see that.
And then
I was going to add something. It's sort of a double-edged sword, this lack of institutional capital, because the advantage is for high net worth individuals to go ahead and invest in these companies that are growing, and they later on capture the upside, because the upside potential is there now. So our view is this is a time to invest in the industry, because in a few years, when the institutional capital comes in, and then you're going to see valuations significantly higher for the same company. So this is a time to invest.
Yeah, and also because of regulatory changes that I just mentioned, because if one or more of those things happens this year, that will make a big difference in valuations and everything.
Yeah, one example. Sorry, Denny. I'll just add a little bit. One example of that is the tax disadvantages of cannabis businesses called 280E, which is it prohibits plant touching businesses from deducting non-cost of goods sold from their taxable income. So sales and marketing expenses, G&A, they are not allowed to deduct that for tax purposes. So even though they may be running a net loss, they actually, from a tax standpoint, may have positive taxable income. So that's something that right now is definitely weighing down, certainly on the public side, valuation. So when that changes, that's another thing that will overnight increase valuations, because it's going to increase free cash flow.
someone is asking if you worry about federal prohibition and the inability to get bank access. Also, if you have any concerns with federal enforcements regarding profit taxes and source.
Yeah, I mean, I don't think it's going to get any worse than what it is right now, which is kind of the scariest moment we had as an industry was when Jeff Sessions got appointed as Attorney General. Fortunately, it didn't last that long. But when he was in office, the one thing that he did was he repealed the Cole memo, which was basically just a guidance to the Attorney General's office to not prosecute cannabis businesses that were operating in legal states. So he repealed that. There was never any enforcement or anything that went on in terms of shutting down businesses that were operating at the state level legally. But at the same time, it did kind of signal a little bit of a concern. Since then, there really hasn't been anything that's put the industry back what we've seen is more and more states legalize. So now we're up to almost 40 states that have passed medical cannabis, almost 20 states that have passed full adult use. And you have in terms of the population, I think it's close to 90% of the US population supports medical, and about 65, close to 70% supports adult use. So this is something that the people want. And then you look at states, which is obviously driving a lot of this. Right now, Illinois and at least one other state is making more revenue from taxes of cannabis than they are alcohol. And that happened very, very quickly. So in terms of balancing the budget and creating jobs and all that, this is one of those few industries that's really a net positive for states. So I think all those things, and plus, the social equity and reform, that's another thing that's driving things forward. So all of that is really in favor of this industry. So just the short answer is no, we don't have concern. That's the long answer.
Mm. And how are you different than other VCs in this space? Other
Yeah.
than the fact I mentioned that you all came from a very successful history of exits, and you've been there for quite a while.
Right. So some of this is kind of repetitive, but our active approach. So we are a board observer position in more than half the companies we invest in. We've invested in 25 different types of businesses within the cannabis space. So we really understand the space from a 10 to 30,000 foot level. Our focus on data and advertising. Very few VCs come in and deploy capital and then say, okay, guys, great. Now, how can we really help you move the needle and get involved? And how can we provide more leads for you or M&A opportunities? So we roll up our sleeves. As you said, Denny, that a lot of that has to do with the fact that we've all operated businesses before. We didn't come from Wall Street. We came from Main Street. So we know what it takes to grow businesses. That's a focus of ours. And the entrepreneurial aspect of what we do. So we've taken a view of this space and said, okay, what can we do, aside from capital, in terms of direct capital to really bolster these businesses? And that's a lot of also where this conversation comes in terms of family offices, because we've built an ecosystem of different funding sources that we know the space needs. And so these companies rely on us to provide a lot more value beyond just putting our check in and then going away.
Someone is asking if you guys are, you place a focus on minority firms, ESG, equality?
Yeah, that's a good question. So it's not right now, it's not a aspect of how we make investments. I would say that our view of it is that, what we've developed is a platform. So what we believe is there'll be an opportunity to create funds in the future as we have more success and our track record improves or continues to kind of evolve. We'll be in a position where we can raise capital specifically for businesses led by minorities or people of color, and under disadvantaged groups, et cetera. So that's something that we will ultimately do, but it's all going to be utilizing the same approach that we have, which is looking for businesses that have those criteria we mentioned before, are fast growth, et cetera, but just happen to also be led by different groups of people.
We have more questions from folks. We'll get back to it in a second. How has the availability of debt financing evolved over time, and what impact has debt had on the investment opportunities?
Yeah, a lot of these questions are coming to me. So, so debt has increased. When we first got into the space, I remember our first presentation in 2017, we were pleased that there were transactions in the $100 million range. And now it's, often that we're seeing billion-dollar transactions. And a big piece of that is debt. It's all private debt, but that enables a lot of M&A activity. It allows a lot of, acquisitions, expansion into new markets, funding working capital, real estate. There have been groups that have taken their real estate expertise and knowledge and brought it over to cannabis. So there's a lot of real estate backed transactions, sale leasebacks, that brings debt into the space. And then also, other asset based lending, whether it's equipment, inventory, PO financing, all that. So that's evolving. That's allowing the space to get larger, transactions to improve. But we're seeing compression. There's more competitiveness on the debt side. So, rates are usually in the low teens now versus high teens. And even you could get into single digits for the stronger businesses.
And I have, and just to make it a little bit more balanced, the next question is not for you.
Good, thank you.
What locations or markets are the most intriguing that will
Yeah.
impact the future of the cannabis industry?
Yeah, the political landscape it's super interesting. As I mentioned, it's an election year. So we have the potential for Arkansas, Missouri, Maryland, Rhode Island to all go to adult use in November. We also have the activation of Connecticut and New Jersey and New York shortly afterwards from medical to adult use. We have Florida, Pennsylvania, which is talking about it, probably not for 22, but maybe 24. So the way we look at it is as each market gets to a certain stage, it becomes very interesting from an investor standpoint. I think the Northeast is especially interesting, and I live in Philadelphia, so it's happening in my neighborhood. And there's just 30 million people within the tri-state area that don't have access to adult use. The illicit market is bigger than anyone realizes. And so as these markets flip, for example, New Jersey is the smallest medical market in the country, pretty much, very low patient count, and it's about to flip open. There's going to be a couple hundred retail stores in the next 2 years. And so that's going to become very interesting in this whole region itself. We also see a lot of growth in the Midwest. We recently invested in Missouri and Arkansas, and part of the reason we went there was because right now it's medical, but we know it's going to flip, and that's a really good time to get in. We invested in Maine recently, and they went to adult use, and the numbers are extraordinary up there. So really, it's interesting how there's 38 different stories. Every state's at a different trajectory, and so we try and get in a little bit before things really take off.
Another question, not for Jordan.
Thank you.
Dr. Trith, what cannabis investments do you see as higher risk and why?
That's an interesting question. Well, I think it's something I alluded to earlier in terms of one, I would say cultivation. Cultivation is a higher risk because it's really trending to be more of a commodity plant product. So I'd say that's a high risk. The other risk, as I say, is single entities, meaning a single unit, whether it's a dispensary or manufacturing facilities. But in any sector, you'll find a lot of opportunities. So this, what people have to understand about this business is that this industry, I should say, is that up until about 5 years ago, there was really very little infrastructure for this business. So what we're seeing a lot is what people call the picks and shovels, the gold mine industry now being developed, and that'll be in multiple areas. Some software, obviously, some hardware, so there's a lot of that going on. So I think you have to look at the multiple sectors of the industry, and there are nuggets there. And I think that's what we look at. We look for those nuggets in those areas.
And another question for you would be, which sectors or geographic regions do you think present the greatest potential returns on your capital in the next 5 years? And I see some questions here regarding how you guys actually operate and work and minimum investments. We'll get to it in a second. So again, which sectors do you think present the greatest potential? Next 5 years.
Yeah. No, in terms of the country, which areas in the country, the growth area in the Northeast is really a huge area. There's no doubt about that. You got like 30 million people in that tri-state area. I mean, I think just in New York itself. But the point is that there's huge amount of potential in the Northeast. And we're seeing that a little bit in Maine, and it's as small as Maine is, it's unreal how that industry and how our investment there has done, how well it's done. So we definitely see it on the ground. We see that the Northeast area is very strong, and then Scott alluded to this already in terms of the Midwest, where you have a market which is medical, but eventually they're going to go to recreational. I mean, that's the trend. So it has to start, it starts in medical usually, and then it goes to the full adult use. So obviously the markets that are mainly medical have a lot of upside potential when they go to full adult use. So
A couple of questions from the audience here. What is the fund structure? Registered A, PPM, other, and while we're at it, what's the minimum investment and holding period?
Yeah, so it's a typical 2 and 20 venture capital fund. So it's a PPM, Reg D. We've currently we are raising money, so it's a $10 million fund. We've raised about 5 million from high net worth individuals, ultra high net worth family offices. So that's part of the reason we're here today, is to certainly spread the word and let people know that we are open for business. So thank you for that. In terms of time horizon, we're making investments. I alluded to this a little bit earlier. We're in the Series A, Series B round. So our investments on the short end are 3 to 4 years, and on the long end, I'd say 7 to 8 years. As exits happen, as we liquidate, we send money back to investors. So they'll get all their money back. And then from there, we take a 20% carried interest, and 80% goes to the investor. We're targeting as high as a 5 times overall return on money. And the reason why we think we're going to be, certainly we're on track for that with our current fund. And the main reason is because of 16 investments that we made, 15 are still operational. And this dates back to our first investment in September of 2017. We've had multiple exits in the fund as well. So we have clearly demonstrated that we know how to pick companies, again, based on the criteria we talked about, how we are involved with them from a board observer position. We oftentimes step in and provide bridge financing or some strategic help to help companies kind of get past some challenging times. So we're really active in that way, and that's allowed us to have really high success with the types of investments we've made. And then there's some home runs, like we talked about, in terms of Pathogen, DX, and some other businesses that we've seen alpha, where you have products or services that fit into cannabis, but then also apply outside of cannabis. So that's where we've had our biggest success stories.
More questions. Does the Panther Group and other family offices fund startup plant touching businesses? And will you be the first money in outside of the owner's equity?
I didn't quite understand the first part. What was the?
Yes.
Okay.
Yes, we do plant touching.
Okay, we do plant touching. Okay, yes, yeah, we do both plant touching and ancillary. Yeah, and then first money in. At this point, we're probably the second money in. We're not really in the seed round anymore. As a general rule, we'll put sometimes a small amount. So if our average check size is 500,000, we may put 100,000 to get on the cap table. That's something that we have done in the past, dating back to our time investing in early stage tech, just to kind of have a relationship with the business. But in terms of our significant majority, 90% of the capital we're investing is going to be in that Series A, Series B round, where typically there's some family and friends or angel investors coming in prior to us putting money in.
Before I go back to a couple of more questions from our attendees here, what are the differences between opportunities in mature markets versus the newer ones, Scott?
Sure. And by the way, I think it's about 100K minimum for the fund. I think someone might have asked that. So
yes.
Yeah. So basically, it's really interesting about what the markets, as I mentioned, they're all at a different pace. So in a really mature market, things like actually advertising and marketing, distribution, delivery, processing of cannabis is important in those markets. Training and recruiting of staff is a big deal because the businesses are getting much bigger and they need to find people. So there's some of the ones in the mature markets. In the newer markets, you know, getting a vertically integrated investment early on, much like we're doing in Maine, investing in brands in those markets and distribution, wholesale and white labeling of brands is important. Like, for example, in California, there's over 3,000 brands. In New York and New Jersey, there's probably 25 total. So there's a lot of opportunity to build a brand portfolio in those markets. The ancillary businesses are also really important in the new markets because every new business needs to figure out the right software. You know, there's a lot of new cultivation. They need the right equipment, the lab testing and things like that. So as the businesses really come up from nothing, they need a lot of those things that we're invested in, like the right fintech partner, the point of sale system for the dispensary, you know, the delivery service that they use. So once those businesses get going, then things change. But it's a very slow moving process. So we usually know how to pick and when to pick them.
And just to understand your history a little bit more, and I will say to everybody, this is recorded, and we'll send you the link to this recording because we have a lot of questions and we are going soon over an hour. So the history of the fund. So I understand Dr. Trith started his own fund in the space. That was the first. Was the second one already under Panther Group several years ago? How did that look like? Because this is the third fund now.
Correct. Yeah. So the first fund was Raymie's in 2015. Then collectively, myself, Raymie, Scott, and David Friedman, our fourth partner, did the Panther Opportunity Fund in 2017, where we invested in 16 companies. And then the fund that we're raising for now is called the Panther Microfund, and that was launched in October of 2021. And that's a target 10 million. We've raised about 5. Towards that, we've made 8 investments in Panther Microfund. So we're active fundraising and deploying capital currently.
More questions. You guys have a lot of questions, if you've noticed. Do you typically structure your investment in a preferred security with a liquidation preference?
Yes, that's typically the way it's done. Yeah. Some will be convertible notes that, you know, convert into the next round, which is most of the time preferred. So most of the time we're in a preferred equity position with some sort of liquidation preference.
And 2 questions here are worrying about some issues you brought up before. Could you speak more about federal taxation for cannabis companies? You mentioned they can deduct business expenses outside of COGS. It would be, another question, helpful to get some color on how companies in the cannabis space handle treasury and insurance, given it is federally illegal. In my experience, banks and insurers don't want to participate in this space.
Correct. Yeah, in terms of the first piece, yeah, I mean, just to kind of reiterate it. So there are tax disadvantages. It has to do with the, you know, cannabis being labeled as a Schedule 1, you know, illegal substance. So as it's you know, Schedule 1, you're prohibited. You are not allowed to deduct non-COGS expenses. So general administrative, sales and marketing. There are ways where you can try to lump more expenses into cost of goods sold. It's not simple. It could eventually become under scrutiny. So that's not something that, you know, is just a simple solution. So there are challenges in terms of operating a business. The other thing is the cash piece. Many businesses operate primarily in cash because, as you alluded to, banking solutions, treasury management is not easy. You know, your local bank is most of the time will not allow you to operate as a cannabis business. They won't let you bring money in. So you have to find, you know, the right providers. And that's really where, you know, as we talked about, investing in the infrastructure type businesses, that's been a focus of ours, as well as building an ecosystem of trusted providers, whether it's insurance companies, banking solutions, et cetera. Like, so that's really where the value add piece of our firm comes in that we understand and know who the people are so that we can solve some of those challenges that a new operator wouldn't know how to do. It's just too many moving pieces.
But if Canada is more, takes it better, don't they have better insurance firms and banks in Canada that would serve the industry? And if so, why wouldn't U.S. companies try to go
Yeah.
power to Toronto and try to get their support?
You can get insurance in the States. You can get insurance in the States. There are companies that insure cannabis companies. And there are banks, credit unions that we'll work with, and we actually have a portfolio company that has a banking solution for companies. So there are ways to work around it. It's not the easiest. It's not like going into your corner bank and saying, here it is. I want to open up an account for this new business. So you have to do a little bit of research into it, but you certainly, it's available. But things are obviously easier in Canada because it's illegal. It's legal in Canada. Here, it's only state legal. It's not federal legal. It's still state legal. So make no mistake of it. These are legal businesses. They're just not federal legal, but still state legal.
And again, more questions about your newsletter. Again, we will send it. If you would send me later, Jordan, an exact link to your newsletter, we will send it. The recording is sent 24 hours exactly after the session. So if you send me this today with the contact information, that's what everybody will receive.
Absolutely.
Another question, another tax question. Is it only growers or plant touching or companies serving the cannabis end market, i.e. companies providing the lights, dry, etc., etc.? I don't understand the question though. Is it only growers? I'm missing the end of the sentence here.
I think it might be referring to the tax disadvantages. So I'll assume that that's what they're asking.
Oh, yeah. To the tax question.
Yeah, the tax disadvantages, yes, that only applies to businesses that actually are touching the plant. So growers, retailers, et cetera. If you're a software company, you don't have the same limitations. So you can deduct all your expenses. It's only the ones that are actually touching the plant and profiting from the sale of the product. Those are the ones who are disadvantaged with the tax 280E.
Got it. Great. So I think we covered most of the questions. Somebody's asking about home cultivation, but I think what's the sentiment among investors about the opportunity in home cultivation market, which I would probably ask, what is that? Is it what I think it is? So,
it is. Home grows. Yeah, home grows. Yeah. People like hobbyists, and this is often came up in for instance, Maine as an example, when they had what they call a caregiver model. So you could grow at home and make your own product up to a certain amount of plants, and then you could sell. You could use them for your own, or you could sell them to a small number of consumers. So it's a very limited market. There's definitely some opportunities. We've been involved a little bit in it, but it's not at all a segment that we're focused on in terms of end users. But there are people who are definitely doing it and focused on it. For us personally, and most funds in the space, it's not really a area of focus from an investment standpoint.
Another question. What are the risks on securing investment in the industry with real property where the business is located? What are the risks to securing an investment in this industry with real property where the business is located? I'm not sure.
I suppose those are the risks like any business would have, right? In terms of how well the business financed, who's running it, what product they're selling, you just look at the industry itself, look at the business itself and how well it's done in the past, I would say.
Yeah.
So I would like to thank you, everybody, for being here. Is there anything else that you'd like to mention that we haven't covered?
I think the main thing, this is a growing industry. It's a huge amount of opportunity. I would encourage people to recognize that, forgetting about the federal legal issue, just remember that on the ground, it's happening. On the ground, we've been seeing 35% annual increases, growth, year-over-year growth in the industry. since about 2015, if not earlier, and projected to continue for another good 7 years, if not more. So it's a huge amount of growth in the industry, and it's a really good time to invest in the industry.
Great. And so we will send the recording and your contact info to everybody who were here and everybody who weren't here, but they don't know that yet, and registered. Yeah, and
Thank you.
just would like to say to everybody, I just came back from Texas. We did our Houston and Dallas conferences that were as packed as we could ever dream. I think the urge to meet one another, together with the fact that everybody and his mother are canceling everything, kind of outbalances the negative aspects of COVID. And we're getting ready, speaking of Canada, for our Canadian conferences in April. We're in Vancouver, Montreal, Toronto. Next week, we're in Tel Aviv, actually. And later on in April in New York City at the World Trade Center. Amazing speakers at each conference. You should check it out. Hopefully the mayor of New York will be there. We're working on that. The new appointed mayor.
Eric Adams.
Thank you.
It's got a lot to do with. Yeah, and I'm looking forward to seeing you in person at one of our
Yes,
conferences.
we'll be there in the New York one, actually. We're planning on
really?
attending that. Yeah, we'll be there in
We
April.
have- I'll mention to you, everybody, Lauren Salig is a daughter and of a multi-billionaire known real estate investor, Martin Salig, and she's a film producer. Mitzi Perdue, whose parents are the Sheraton family, and her late husband is the Perdue chicken family. So basically, if one side goes bankrupt, she's still good. I don't know. Everybody tells me we need more women. I find to be a minority in my own conferences. It's led by women. And maybe Scott, you would know David Sable, who was the CEO of Young and Rubicon and one of the biggest names in the advertising world. And while I'm bragging, oh, it's not a question. It's just somebody writing us. Thank you, Danielle. It was very interesting and much food for thought was provided. So thank you, everybody. I'm looking forward to seeing you at our next session. And we will be in touch.
Thank you, Denny. Appreciate it. Thank you, everyone.
Bye-bye.
Bye-bye.